The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. It's it's New Year's Eve, that is, and we're going to be not cutting it close today on TFNN. Got a full day. Steve Rhodes is next. Everybody's going to be on board. I think Tom's going to probably do an hour later today. That's the only thing that's cutting it close there. But hope you guys have a good holiday. After the show today, I'm gonna pretty much cut it out of here a little early. Not going to be a lot of heavy trading today. I'm doing dress down Friday already, and do we have the charts up? Everything okay? Okay. So tell you what, we're going to take a look at the S&Ps initially because we had a little bit of movement yesterday, and we always talk about that close above and go back and retest. And yesterday on the weekly we had, and I'm just mousing over this, we had a pullback to about 2073. And that weekly unfair highs rounded off at 2072. So again, those are the really cool, powerful trades you always talk about, the close above profiles and go back and retest for that high probability setup. Now, we don't have anything up here in the ether, so to speak, on the daily. No new profiles trying to appear. And on the 240s, here we go. So we started having a little bit of technical damage on the short term at around 2089, and that was the first time we had started breaking down. I think 2082. 2082. So then we had kind of the technical damage starting on the short term, and we went back and tested that all-important long-term inflection point, unfair highs on our weekly. We got a new profile here, but we've been talking, just to kind of back up and look at this a little bit more objectively. Towards the end of the year here, we've statistically and historically decided from looking in the past that, it's kind of a low probability trade to try to put on any big shorts towards the end of the year. Past the last 2 weeks or so of the year, shorting the S&Ps is probably not a good idea in general. And no matter what's going on, that's just kind of been a statistical fact. And we started noticing also yesterday some drift in market breadth up here at the top on the S&Ps, but nothing major, and still very positive. So that allowed us to, I guess what I'm trying to say in a roundabout way is that allowed us to look at that inflection point around 2072 as a buying opportunity, because we're buying support since breadth is extremely positive still on the index itself. And this is one of the two major sections, if you will, of this scanner's the breadth calculations here, and then we've got the filtering mechanisms down below. Now, what's really cool about this in general, what you're looking at right now is you're able to pull up quite a few instruments, but the cool thing is we're putting heat maps into this product where when you, for instance, check on the S&P 500, you'll actually start viewing the sectors that the stocks are in a heat map fashion that are going to be color coded as things become apparent above profiles, below profiles, within profiles, and how far they're above or below by a color coded mechanism like stronger green, as in stronger red. And hopefully that'll be a little bit more insightful piece of information. We've got all the data to do this. We just got to graphically do it, and we were planning on rolling that out after the first of the year. So anybody who's got this product is going to be grandfathered in, and we're going to keep adding situations to that product. We're actually going to be putting into some piece of this some signals that are derived off of our algorithmic strategies that also have breadth incorporated into it. So you'll be able to get index buy sell signals or indications, I guess I should say, from a compliance standpoint, of how these things are going to unfold, as far as some original strategies that we have that we use ourselves on some of these index components like the Shanghai, the S&P, Eurostoxx 50, but they'll also have a component in there via the breadth calculations, which are going to hopefully eliminate one side of the marketplace during those strategies and be able to opt out on some of the signals that historically have made sense, but increases the probabilities of being correct in our opinion, and increases the winning percentage, so to speak. Because remember, on the situation when it comes to building strategies, you got two major facets in those particular calculations. One of them is ultimately the risk reward. Are you risking, for instance, $1 to make 3, 4, which is a risk reward for 3 to 4 to 1, and then you've also got the probabilities of winning percentage, and hopefully that will focus on the winning percentage part of a strategy. So again, if you're winning 45% of the trades and you're risking $1 to make 4 every time, that math over time will hopefully work out in your favor. So we're going to be able to deliver heat maps based on the sectors, and also be able to deliver some signals in general via this particular architecture, which we're constantly building on. So just wanted to throw that in there. All right. Okay. So moving on, let's take a look at the euro. This is something, again, here's the daily situation. The close below, retest, head lower. I'm not going to belabor that. That's just, in my opinion, the all-time short, the gift that keeps on giving. We've talked about that. And we're going to edge down here and take a look at something else that's been on the radar screen that kind of moved around yesterday a little bit more than had a little rally back up into the 54 and almost a half area. But this is the long-term view on crude oil. I think everybody just needs to kind of keep this in mind. Here we go. The crowding action with it. When this was happening, we were talking about this is more than likely going to do a flush. This is not the type of activity you want to see from the long side. I was kind of looking at this going, my God, if I'm long, I'm terrified, as this thing just continues to crowd and not want to bounce and stay away from these unfair lows. And lo and behold, we closed below, and now we're drifting lower. Make sure you put your stops in, folks, and I've got mine above 55.11 on this particular product. Talked a little bit about, and there's going to be some noise. I mean, yesterday obviously there was some noise. We rallied, got almost $2 from the bottom yesterday, but keep in mind that those rallies at this stage on crude oil are to be sold until we're told differently, and that's just the way I'm looking at crude oil. We won't have any technical damage on the dailies, basically big time technical damage, until we breach that 61 area. And then that, in my opinion, is again a resistance area to be tinkered around with from the short side. So let's take a look at natural gas. Excuse me. This is something that, as we wait for our charts to come up here, this is something that we talked about, possibly, with this new supply, or excuse me, new demand down below, being a new profile that appeared yesterday. I talked about 3.089 being something to possibly start looking at, picking a battle down here. We kind of poked our head below $3 on the Feb contract on natural gas, popped up, got the new demand area, and I think this is a low risk trade around the 3.089 area. We actually sunk below there, got a little bit of a bounce off of it, but now we're kind of, again, trailing down 3.053. If you've never traded natural gas, it can be a harrowing experience. It's a relatively expensive product to trade sometimes as far as margin and things like that, but if you're trading the big contract. But again, I think you don't need to tinker around with this from the long side until we get back above 3.089, and that's just the way I'm looking at it. And stops have to be in order on this particular product, and the goals right now will be 3.333 up top and possibly even higher. But right now, again, it's probably a sit on your hands trade. I don't like shorting it this far in the hole. This is the weekly situation, so that daily demand area, we're just going to pay attention to those inflection points there. We got to look at gold because it had a little volatility in gold. Obviously, yesterday we went up. Let me see where we went up to. We actually had a close at 1200, and we talked a lot about waiting for this thing to get a close above 1200 and then start playing around possibly from the long side and using 1200 as a fence to move higher. Again, gold has broken my heart and sunk back down below there. But again, we've got to give this a little bit of noise factor here. Gold's a very volatile instrument, and these inflection points, we've been kind of tinkering around with this 1200 area for a while, and still got to orient stops around that area, in my opinion. And remember, the theme's always going to be lose a little, lose a little, lose a little, make a lot with gold, and that's just the way our automated strategies work, and that's the way trading works in general, in my opinion. This is defying logic, but we've got to go with this. We've talked about the 10-year. The top is going to be around 127 on the 10-year, and not looking at this from the short side at all yet. Starting to think about the short side, but not, can't really bring ourselves to really start shorting this with any conviction yet. Here's the 30-year. Pull up. And as you can see, we continue to find support on the 10-year and the 30-year whenever we get down into those areas or cross the borders from below to above. In my opinion, we've got to be buying this. The 10-year is a little bit less high probability situation right now. The 30-year. So I think 127 is your targets on the 10-year, and on the 30-year is 146. But what do you do with it now? I think it's kind of a no trade right now, and you've got to wait for the first year to see what the market's going to do. Stock market, that is. We talked a little bit about wheat yesterday. I want to just revisit this, and we talked about the 583 area. I just want to say that we've talked about sitting on our hands here and looking at this from the buy side around 583 on the March contract. I'm sticking with that. We're kind of gradually getting down in there. I'd love to see a kind of a violent move down into that area. Here's what's happening today already. Gotten below $6 a bushel, so I think if we can gravitate a little bit lower here on March wheat, that would be the decent play and the high probability area to take advantage of there. I'll tell you what, we're going to go to our first break, and Eric Cordy's going to come back with us. We're going to talk about some year-ending thoughts and what might be happening at the first of the year based on some fundamentals. We'll be right back, folks.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I don't know where I'm looking here. Not too many screens. God, we actually have a little snow here today in North Carolina. Unbelievably so. I couldn't believe it. I thought it was frost, but it's actually snow. Amazing. We actually kind of summed up the last segment with talking about wheat. And I want to just drift into corn really quick while we're talking about grains. And we had a pretty good move down on corn yesterday. And here's the situation on corn. Here's the 240. We kind of broke down finally. If you're looking at the 240s, got a lot of guys out there that trade grains. And I talked to a lot of folks who are in the grain market from a commercial side. And I was like, what's going on? Is this the breakdown into $4 everybody was looking for? And then we're going to maybe drift lower than $4. And, you know, the sentiment out there from the commercials that I'm talking to is, you know, we could actually go back into the $3 range, but this is the deal on corn. We've gotten back down to the bottom of the fair auction, which is 404. We may break this, but you've got a decent opportunity here from the corn standpoint on a major inflection point on the dailies. But and let's just kind of go in the weeklies. Here's the weeklies. You don't have any profiles appearing. There's the 394 area. So if you're trading this on a long term, if you'll notice, wheat being the 583 area that we just spoke of is slightly lower. I'm just going to pull that back up. Could drift a little bit lower here. 583 is, and these are, these products kind of to some degree work in tandem because they're alternative feed, alternative feed situations. And the spreads on these are usually, I say usually, let me turn this down here, are usually in line, especially this time of year. You've got 583 about, what is that, 16, 17 cents lower on wheat. And then you've got corn, which shows unfair lows, unfair highs on the weekly, 394. So you're about 10 or 11 cents lower on corn to reach a major inflection point. I'd probably pass on trying to buy the daily unfair lows on corn right now and just wait possibly for those weekly unfair highs at 394, which would, for the most part, more than likely coincide with wheat possibly coming down into the 583 area, to have both of these sitting on fairly decent major coincidental inflection points, considering everything that I just said. So that's the situation on corn and wheat. I think this is a wait patiently. Maybe these things will drift a little bit lower and we get into a little bit better situation as far as a buy opportunity on both of those products, if that makes sense. All right, we talked a little bit about some other commodities yesterday. I just want to follow up with them. Talked a little bit about sugar, and here's the situation on sugar. We had a little, kind of rally back up and poked our head above that 1472 area, and we're drifting lower. Again, the technical damage will not start on sugar in a large way unless we get above 1532. Again, I think these areas down here are still to be sold. Again, things on their lows go lower, and that particular commodity seems to be defying logic. We've also got that related to some degree to what's going on here. Excuse me. Not much, but it's still a factor. The dollar do have that orange bar attempting to appear on the dollar, which hopefully will give us a new set of inflection points here on the daily at the very least. That's the situation on the dollar. I also want to kind of cruise through. Let's see. Take a look at this one. This is something we talked about. Cotton let me just make sure we got this straightened out here. We started having a pretty big move here in cotton, and we got back down below support here. This is something that I would consider to be a buying opportunity because we're kind of scaling up here. We had the technical damage over the last month or so, and that particular opportunity, this is a little bit too much pain for me. This is a kind of a stop out, wait and see. And if we get back into a bigger inflection point here, 60.16, this is kind of a wait and see on cotton right now, on March cotton. So again, this is kind of another theme of lose a little, lose a little, lose a little, make a lot. I think we need to sit tight on cotton right now and just wait and see what's going to happen here. We're going to go to our next break, and hopefully we'll be able to grab air. Had a little bit of technical problems before. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Thanks for coming back, guys. We're having problems getting Eric, a little bit of technical issues, so we're going to opt out on that. We're going to continue forward here. I've got General Dynamics up on our screen right now. Okay, I understand. Okay, so 140.35 unfair lows. We had, this has been a stock that hasn't obviously made new highs with the market making new highs. Here's the situation on General Dynamics. And right now, this may be something to be looked at the first of the year from a selling standpoint at this stage. 140.35 unfair lows. And we drifted down below there. Let me just pull this up. Okay. Yesterday, a little bit of technical damage on this. It'd be nice if we had a retest back up into 140.35. This is kind of on the screen. Okay, and I hear you. And this is the reason being. I was taking a look at this. I pulled up the scanner, look at things that are trading below daily unfair lows. This is the S&P 500, folks, and we've got 1, 2, 3, 4. Let's just call it less than 20 stocks that are meeting the criteria. And let's take a look at some of the really weak ones here. CNX. And I'm just going to pull this up and take a look at it on our landscape view. As you can see, the level of the market is the yellow line, and we're sitting below profiles on all levels. I'm going to take a look at this. CNX. Okay, so here's the weekly view. Obviously, there's some energy stocks in. it's not a mystery or some like finding plutonium here by mistake. These energy stocks are rife in this area, obviously, with crude oil continuing to trail lower. Here's CNX on the weekly, and here's the daily situation on CNX. So crude oil has, trailed down a little bit faster than this stock in general, but let's take a look at where we're at right now. We're sitting on unfair lows, 34.13. A lot of these energy stocks have not wanted to seemingly go as fast and as low as crude oil in general. That kind of puts a little bit of a divergence attitude on my radar screen with some of these. So you've got this particular stock sitting at unfair lows, 34.13. If we get any move up in crude oil, these things may have been basing a little bit here for a pop up. So keep that in mind. But my thoughts on crude oil is that we're going to drift lower, continue to drift lower. So if this particular stock, I guess what I'm trying to say, drifts lower than our unfair lows here at 34.13, the buying opportunity would be above 34.13 as we possibly may get back into the balanced area. But you've got a high probability setup right now. And that's the way I'm looking at CNX right now. So FedEx Corp, we talked about that recently, and now we're getting back down below unfair lows on our daily. We're sitting right there. We talked about this possibly being, let's just pull up FDX. Possibly a buying opportunity. We kind of got back into the balanced area, come back and retest those unfair lows. We're sitting right there. I'm still looking at this as to some degree a buying opportunity. We poked our head below yesterday, but again, the scanner's telling me that we're sitting, of the stocks that are trading in the S&P 500, these are the ones that are sitting below profiles, and some of these are sitting right at the bottom of those daily profiles, which I'm showing you right now. Noble Energy. Let's take a look at NBL. NBL. Okay. Last week, we got a new profile appearing on the daily. And again, some of these energy stocks are kind of showing some divergence, holding in there as far as crude oil making new lows. These are kind of hanging in there. 45.75 sitting are the weekly unfair lows. And then we've got this 40. Let's look at this, 47.59. Okay, so 47.59 and 45.75. So you've got a little DMZ there. This is showing a little bit of, hanging in there relative to crude oil making new lows. Some of these energy stocks may be in a buying situation, just like we talked about with CNX a while ago. It may be time to start nibbling on these things because a lot of these particular energy stocks, these companies will become and have to become more efficient at what they're doing, even if crude oil continues to go lower. And that may kind of turn around fundamentally some of the statistical landscapes that some of these analysts look at. And technically speaking, this is starting to show a little bit of a divergence, and I just wanted to point that out. I want to take a look at another couple of stocks here that are on the radar screen. SWN. Now this is, across the board, just looking extremely sick here. And I'm going to pull this up. Southwest Energy. Ooh, ugly situation there. SWN. Now again, when you're trading stocks, you're always trying to buy the leaders of the pack and possibly sell the losers. And this is one, obviously, with yesterday's activity, this is one that, you've got to take a stop out on that premise that we just spoke of. And there's probably better buys in the energy sector if you're going to nibble like that. So SWN, again, below profiles on weekly. Here we go, making new lows on the daily, on the 240. And if we were going to buy any energy sector type related stocks, this will be one I would not be buying. Let's take a look at a couple other things here. VeriSign, we looked at the other day. VRSN. Let's pull that back in. VRSN. Ouch. Okay, so here's the situation. Let me pull this up. Okay, all right. So this was one that we looked at actually that would possibly might be a buying opportunity, and we've actually had to close below intraday because of the market drifting higher. We talked about this not being maybe one of the best shorting opportunities, and a possible bounce off the unfair lows here. But again, this is one where we've been proven wrong, and now you've got to kind of wait and see here. We're below weekly unfair lows, daily unfair lows, 240 unfair lows, and 60-minute actually. So this is one we got to kind of opt out on at this stage. If you're going to look at longs, there's possibly some better longs here. And if you're looking at this from the short side, you've got some leverage now, by the way, 57.59 to 57.95. So again, this is kind of showing itself at the end of the year that it's getting out of the balanced areas and getting into the imbalanced areas on the downside is something to put on the radar screen for sure. Let's take a look at Starbucks, SBUX. And as you can see by what I'm putting on the screen here today and talking about, is I personally feel that we may have some kind of profit taking situation at the very first of the year. Here's the weekly situation on Starbucks. There's the 83.27, and we're sitting on unfair lows here at 87.79. You could look at this like, hey, it's a strong stock and a strong market. We could start having some technical damage here on Starbucks below 81.79. Excuse me, 81.80. We're trading 81.79 right now, and this is something that we've, looking at it from the broad scale, we haven't really wanted to get back trading within the balanced area or above on Starbucks. So therefore, this is something I'm looking at that may fall apart a little bit after the first of the year. These are kind of indications after the first of the year here. Obviously, it's the last day in this year. I think Friday's probably going to be not a great day to trade, by the way, even though that's January 2nd. So that's something to keep in mind. CME Group. If you guys are trading futures, you know that the CME Group is now starting to charge major exchange fees if you're not grandfathered in. I don't know why they're doing that. It is not the smartest move in the world. It's going to, give them a bump in revenues more than likely, just because some people are going to hang around. But to trade their products historically on a lot of different firms, you've been able to take advantage of a discount in exchange fees, or maybe even free sometimes, based on the clearing firm that you're trading at. And now they're going to basically draft the exchange fees directly out of your trading account. And here's CME Group. As we look at this, new weekly profile attempting to appear. Here's the level of the market. Here's all your inflection points as you can see right now. But let's just go into the chart for CME Group really quick. And see that obviously this has been on a tear straight up. We're well above weekly profiles. 85.35 would be the target on the downside. And why is that the case? Because we had a profile appear above price action here the other day. We've retested it day before yesterday at that 91.07 to the tick there, closed below retest. That's why I'm pulling this up. The scanner picked this out, closed below retest. This may drift lower, and you may have a decent $5 or $6 move here in the CME Group, trading back down to 85.75, starting to show itself a little bit, starting to show its hand as a weak stock towards the end of the year here. Just wanted to pull that one up. Avon Products, AVP, and again, this is something Avon Products just see that one. Let's just go back into AVP here. AVP. It's a $9 stock. It's sitting on its lows on the weekly. Here we go. Gone back and retested unfair lows and staying below on the daily, 9.59. It's hard for some people to short a $9 stock. I understand that. But this is a very similar situation, looking similar to crude oil in a sense, and things on the lows go lower. We come back into a major inflection point. The good news is you know where to orient stops on this particular type of thing. based on the inflection points, based on the ones that are provided in the scanner. I'm going to go ahead and pull that up again. Here's the inflection points to pay attention to. The main one, in my opinion, 9.588, 958, 959 on Avon. That's the situation on Avon. Okay, I'm going to go into the scanner. I'm going to kind of kill that sorting. I'm going to go back to my S&P here, and these are my S&P 500 stocks. I want to show you it's got everything in there. Come on. Okay, my screen's stuck a little bit here. All right, so as we go into this, we're going to put a new filter in. Okay, here we go. We're going to clear that out. We're going to go into daily again. And we're going into, I'm sorry. God, I can't get this thing. Okay. We're going to trade above the box here on the daily. We're going to wait for that filter to pop up showing only matching results. With all these things running, I think my computer's getting ready to throw up here. As you can see, quite a few stocks still trading above daily profiles. And if you take the inverse of what was going on there, we basically have almost 60% of the stocks in the S&P still trading above daily profiles. You got to take that for what it's worth at this stage and wait. And the reason I'm pulling that up so you can see that pretty clearly is you've got to wait pretty patiently after the first of the year. If you're thinking about shorting the market in general, remember we bounced, and this is the S&P talk here, we bounced off that 2072 area yesterday, weekly unfair highs. And what I'm doing here is I'm going back to our S&Ps before this last break here. I'm going to pull this up. And as we looked at that, obviously, if we can get below 2072, that's going to be a big deal. But to put on any shorts with conviction, you want to have this breadth start to turn and hopefully turn negative to give you some confirmation that a lot of the stocks in the S&P are rolling over, so to speak, as far as at least getting back into a balanced area for the most part on the internals of the S&P. That's not happening yet. It's not happening right now. The market could open up at the first of the year and everybody's whistling Dixie and the thing may go north for a while. But ultimately in January, my opinion is that we're going to come off a little bit. But you know, this is going to be a decent barometer up here. These breadth statistics is going to give you some indications that it may be okay to kind of put your toe in the water on the short side, and that's just not happening yet. And that's kind of what I'm going to look at, because statistically speaking, back testing wise, we've looked at this for 11 years worth of data going backwards, and that's a relatively high probability situation that we like to focus on. We'll be right back, folks, after this last break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Was taking a look at some banking stocks earlier. JP Morgan, just want to point this out. This is kind of the MO for a lot of these stocks here. I think a lot of these financial stocks, we've got, kind of the Fed stepping away possibly, but of course, they're going to come in with the dialogue anytime the market ticks down. And again, you just got to, this is, again, don't change it. It ain't broke. If it ain't broke, don't fix it type situation. If they're stepping away, so to speak, and going to let finally a natural marketplace do what it's supposed to do, some of these banking stocks may actually continue to drift higher, because remember the yield curve spread and the things going on with rates that may not have kind of big mama sitting there for the most part, in general terms, propping up the market, at least the treasury market. We've got to look at that as banking stocks. That's when they really start making money, when the yield curve widens out. So again, the Fed stepping away, that's going to be some things that are going to hopefully benefit banking stocks. This is JP Morgan sitting on all-time highs, sitting above profiles here again on the daily. Morgan Stanley, similar situation. Again, there's going to be some volatility in these things, but again, you got to look at this particular sector as something to pay attention to, because they've kind of been forecasting this a little bit, It's been no mystery that they're going to be the ones that take the big winner out of what's going on with the Fed stepping away. And if you go into the scanner and look at some of the stocks that are just outperforming, these are the ones definitely on the radar screen. Let's just take a look at Bank of America. And wow, these are all daily setups for banking stocks. And again, some of these ones that are, I've tried very hard to find banking stocks that aren't doing very well. This is, let's see, pull up this one, BB&T Corp. This is one out of North Carolina. Actually was started in Wilson, North Carolina, where I'm from, and obviously a publicly traded company. Here's the situation on BB&T. We've come back and retested these unfair highs at 38.90. Excuse me. Let's just call that 39 even. Consolidating and wanting to drive higher off these daily unfair highs here. Here's the weekly. As you can see, we've kind of battle tested up above the weekly. Now we're sitting above the daily, and not wanting to get back into the fair auction or the balanced area on BB&T. That's the situation on the banking stocks. Before we head out, I just want to go into the yen for a second as a closing note. The end of the year. These are the inflection points on the weekly on the yen. We've, actually talked about these targets above 120.42. We've reached those, relaxed a little bit here. Here's the daily situation, that 120.42 coinciding to some degree with 120.82. Here's the support area on the yen. I'm always still a big fan of buying the yen only, not selling the yen. And in an inverse relationship, that means that I think the yen is going to continue to get devalued. Here's 118.20 sitting down below as next support area on the yen in general. Well, this is the end of the year show. You guys have a great holiday. Steve Rhodes is going to be next, and we'll pick it back up again next Monday. I'm not going to be on Friday. You guys have a good trading day. Thanks very much.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.